Yes, I'm giving you a double dose today. 2 videos dropped in one day. Let's talk about why a lot of traders constantly are getting stopped out. One, they have a hard time understanding the market and understanding from a broader perspective what takes place and what you need to understand when it comes to those driving the market, the banks and the institutions. The market is filled with money. Okay, we're talking about liquidity in areas that with the banks and institutions set up traps. Okay, I talked about that earlier video. They do so for a reason, because they want to be able to fuel their way into a position. All right, it's a way to entice traders, retail traders specifically, when we're talking about areas of supply and demand. All right, so what I'm trying to say is, don't get caught up in being liquidity. You do not want to do that. I'm going to show you and explain to you what goes on in the market so you get a better understanding when to kind of, or what areas to look for when it comes to supply and demand, which increase your probability of looking for better setups. Okay, if you know anything about you may have heard this term, supply and demand chains. All it is basically an area where the market is creating a swing. It can be a bigger swing, and there are inside that swing there are multiple internal breaks of structure, smaller structural breaks to the downside or to the upside. Okay, so for example, here, just showing you here on my 60 range chart, I'm going to kind of blow it up a little bit. We're ranging today, guys, so you have to really understand and see and know when to kind of stay out of the market, unless you really know how to trade ranges. But you can see with the market made this push to the downside right here. We had a push, a low, a pullback, and then a break. So we have swings that aided in the structural break here to the downside. All right, if you can see that, correct? And you have to understand, if there are multiple swings or multiple internal structural breaks within a larger swing, the market will tend to like to test those swings or those internal structural break areas, especially when we're talking about like right here. Okay, right here to the downside, which will be demand areas. It likes to test the ones that may be higher up in a sense. Okay, I'm not saying that's going to happen at all times, but you have to think about it in this case here. If there are areas which are unfilled, okay, areas of imbalances or gaps which need to be filled, but there are internal structural breaks within a larger swing to the downside where multiple demand zones are being created, you have to think logically. If the market hasn't tested, say for example, this zone here yet, okay, it pushed down, pulled back, and then broke. This was the last swing to the downside where the market broke structure right here below 250. Now, it did come up here and it did reject this area, but you have to think, if they pull back to this area right here, but there's an unfilled area right here in which the market hasn't completely finished tapping into, because you see where the market broke lower right here and then it pulled back. Did they come back and retrace all the way back to this area of demand right here? Not demand, supply. If I said demand, guys, and talking about these swings to the downside, I meant supply. Sorry about that. I'm talking about supply, not demand. We're talking about going short. All right, so let me clarify that and get the airways cleared right there. But anyways, so supply right here and supply right here. Okay, so you saw where the market retraced, pushed down, pulled back, broke structure. So we have a supply zone here and a supply zone resting right here. All right. Again, you have to think logically speaking. When they pull back and test the first area of supply, are they going to stop there? Sometimes they will. Okay, and if you see the rejection, there's nothing wrong with taking the trade, but you also must really understand too that if there are gaps or back at this area of supply which has not been tapped into right here, you have to be logical too. If you take that first area, okay, that first area of supply right here, think very smartly to understand that you could get in for a quick scalp, but think the trade may be short-lived, because there's also something above here. So you could end up getting in this trade right here to go short and become liquidity. So if you're going to take a trade and you know that there are multiple internal zones, okay, where are multiple supply areas, all right, within a larger swing, all right, which you can classify that where there are multiple supply or demand, in this case here supply chains, where the market ran to the downside, you have to think. And say, for example, there were 2 or 3. If this was one, and then we had another one, and then this was the higher up one. In terms of premium and discounts, we are looking to trade in an area higher up within the chain itself, okay? Within the supply chain, if we have multiple zones, because the banks institutions they're always trying to get in at the best prices, okay? Whether it's at a discounted area where we're buying at an area of demand or supply. That's the key to how they work, all right? That's what they aim to do, but they set up traps, what I like to call liquidity traps, that flush traders out of their positions. So if you got into this short right here, all right, yep, you may have picked up a little bit, but then you got railroaded and got flushed because the market continued pushing higher. This was a trap right here where they created a supply zone to fuel, or not say fuel, to entice those that are waiting for the market to get back here, because yes, it is a supply area when the market gets back there, to short, all right? Because they want to try to collect as much money as they possibly can on their move back to the upside, to where they ultimately want to take a trade, where they want to finish filling their orders at, all right? So it makes sense to wait for the market to get back to here where prices are higher at around 360, 18,360 versus right here at 319. Higher up, supply. Lower down, demand. Higher up, premium. Lower down, discount. Buying the lows, selling the highs. So just be able to read the market when it comes to with there's multiple chains within a bigger swing, okay? Especially when we're breaking structure to the downside. You can see right here, the market broke lower, we pulled back, okay? Pulled back pretty strong, and then broke structure right here, and it created this chain right here, this supply chain here, and this supply chain right here, all right? Both of these are zones in which the market more likely can transact at, but the one higher up makes more sense because that price is at a higher area where banks, institutions would like to transact or finish filling their orders at. Understand that. So I'm going to show you another example we're going to talk about. I believe this one's going to be a demand setup. All right, this is a little breaker structure to the upside right here. There's a chain right there, small little swing where there's demand at, but there's also demand resting back down here. So we have 2 zones, one here and one here. Look and pay attention to what happens here. When the market starts pushing lower, you see with this bullish candle right here, that means a lot of traders were interested in buying and did get into the market. They may have gotten in for a few points before the market actually flushed them to do what? To come down and test the zone right below. So would you rather get in here at 18,212 or down here where the banks and institutions are looking to get in at at a lower price, okay, a discounted price around 190, 192 area. And then what does it do? They gain momentum. They've gained fuel. I like to kind of like think about it like Pac-Man. You know, you ever played the game Pac-Man and it's going around and it's getting a little eating those little pellets to re-energize itself to gain energy, and then you got the ghost floating around. You know, and at some point you can actually tackle the ghost in a sense. You can gobble them up because you've fueled up and you become energized enough to where you've got all this power and you can push through certain things. You know. So think about it like that in a sense. So the market runs to that's how I think about it. The market runs to the upside. It takes out this first area here just to come down to tap into a lower price and more discounted area. The banks, they love this because they say, hey, we got a better price and we just took out and stopped a lot of traders right here as well. We collected some money and then they're going to run the market back into the upside. And what do? Run this high right here sitting at 252. So what I'm trying to say is don't become liquidity. Think in terms of what are the banks and institutions? How are they moving? Let me think like them. The quicker, the faster that you understand and put yourself in the mind frame and the mode of thinking like the bigger, the institutions, because they're the ones that drive this market. Without them, there is no market. We are just small fish in the pond, and they're looking to gobble us up. Just like those ghosts are looking to take us out in that game of Pac-Man. So we have to think strategically how we're going to maneuver and get around them so we can energize ourselves to take them out. But we're not talking about taking the banks and institutions out because we'll never be able to do that because they have too much capital to be able to move the markets with. But we do want to ride their coattails and we want to think logically like them and make smart moves with them. So All I'm trying to say is that if you see multiple chains, okay, smaller internal areas of structure within a bigger area or bigger move, like this swing to the upside right here that took out structure right here above 231, and we have two little small zones back within it. Will they stop at the first one or they stop at the second one? You have to be able to read the market and understand, okay, yeah, if you took this trade here, you got to know that you could become liquidity, okay? They're setting a trap up just to move the market a few points lower to gain, what they need, take your money, and then boom, blast to the upside. That's how the market moves, okay? Just think about it like a rocket ship. The market has to fuel itself enough to be able to make powerful moves either, to the upside, because the rocket ships don't go to the downside, right? Move to the upside. But just think about it in terms like that. You have to gain enough fuel to be able to do certain things. Just, in the sense of when we're looking to fuel our bodies with fuel, and that's food, okay? All right, we have to have the energy to be able to do certain things throughout the day, exercise, maybe do some yard work, get the job done, and, within our profession, whatever the case is, so we can fuel our minds, okay? You wake up in the morning time and you're not eating breakfast, all right, what happens? You're not going to be prepared enough. Your mind doesn't have the energy. You haven't put the substance in your body to be able to do what it needs to do, and the brain to think the way that it needs to think, okay? So, if you ever been hungry, what happens is like most people, when we're hungry, we don't tend to perform at our best or at our peak performance, right? So think about it. It's just common sense is all I'm trying to say. All right. I know I'm getting a little bit off task, a little bit off subject. Just kind of throwing some analogies into the tank. But anyways, so look for things like that, because you will see in liquidity is everywhere on the charts. Higher time frame or higher base charts, all the way down to the lowest base chart you could possibly see or trade from. So, you'll see it everywhere. Here's another example right here. Okay, so the market was running back to the upside. All right, that was last Friday. Into today's session, to the overnight session, what do we see? We turned and we started moving low, but we really started ranging, okay? But we did have a structural break right here to the downside, as you can see here. But then the market starts running back to the upside, and it took out structure above 372.5. All right, but as it was doing that, look at these little small areas of, say demand right here, pull back, demand right here, pull back, demand right here. These are those small demand chains that I was talking about, all right, within this leg to the upside where it broke structure above here at 372. Now, can it come back and test this area here? Sure it can. This area here? Sure it can. But think more logically speaking. This is a leg to the upside. Do you want to buy at the upper portion of a leg, the middle portion of the leg, or the lower portion of the leg where the move started from? Remember when I talk about buying or selling in areas where the move starts at? It just makes sense. And the reason why I'm saying that is because of liquidity. If there are multiple chains, in this case here, demand chains, below within that leg, the banks want to get in at a better price. They don't want to get in here. They don't want to get in here. All they did was set up traps for you as the retail trader. All right. So look what happens on the way down. Some people may have gotten it right here. All right. Maybe you got a few points. Boom. Collapsed against you. You became liquidity. You took the trade right here. Okay. Maybe you got a few points. Boom. What does it do? It traps you and it moves lower. You became a liquidity. I'm not saying that you can't take trades if you move down to a lower base chart and see it set up, but you got to think logically speaking what's taking place here, because they can further move to the downside and test areas like this right here, which haven't even been tested yet. A major area of demand right here. All right. And also, it was the origination point where the market really started feeling itself with lots of momentum to push to the upside to break this area here. You see? So when the market got back down here into this demand area at a cheaper price, okay, we're down here at 252 versus being up here around 340 or here, well, this was already tested, so we're not going to consider that area there because it was a demand area, but we're not going to consider that, nor this area here. But still, I mean, it could have reacted here and broke to the upside. But look, we have a zone right down here. So that makes more sense. Let's fuel ourselves up, take out some liquidity, back down to the downside, and then boom, blast off momentum to the upside. All right. And I'm not saying this thing is going to push all the way back up, but there's potential for it to at least come back up and push higher. All right. Or it could fold and come back down to the downside and break structure below here at 240. All I'm saying is just Look at those smaller areas, those chains, those smaller blocks, those smaller internal areas where the structure breaks within a bigger swing. All right. And think logically speaking, because the market can react to any one of those zones. But if we're thinking in terms of supply and demand, we're at a demand area. It would make more sense to wait for it to come back to the lower portion of a leg, allow it to fuel itself up, and then make its move, and then in reverse with supply. Hopefully that makes sense to those out there. So I'm saying this because I know people are constantly being stopped out and they can't understand and grasp why. They think that every zone should work out, and it's not going to. We don't control the markets. The sooner that you understand that as retail traders, and the sooner that you understand that your strategy is not going to work 100% of the time, there's no strategy that works 100% of the time, because people get frustrated. Yeah, I know, I've talked to people before, and they say, well, I learned this from this place over here, or whatever the case is, and I spent thousands of dollars on different courses. You have to understand that regardless of what you paid for a course, or how many strategies you learn, first you got to back test them to see if they work. Okay, don't give up on a strategy if it's consistently working for you, but then the moment it turns out that I had a losing week, say for example, all right, maybe you didn't do something correct. If it was working for you, you had to be consistent for a period of time, but then all of a sudden it stopped working for you, then it's something you're not doing correct, or maybe you forgot something, or getting mixed up or confused, whatever the case is. But you also have to understand from the bigger picture is what's taking place when it comes to the banks and institutions and how they move. You've got to understand that. Strategy is just one part, but when it comes to these live markets, you have to understand who's making the moves and who's fueling things behind closed doors to actually happen and unfold. It is us as retail traders. Our only primary responsibility is to be able to seek out and understand how those banks and institutions are moving so we can move with them. No, there's no way possible ever that we are going to be able to, outdo them. No one has that kind of capital in a sense, all right? So we'll never be able to outdo them in any means. It just makes sense to ride their coattail. See the footprint, see the setup, see what they are accomplishing or trying to do, because they lay it all over the charts. They're taking steps all over the charts. You can see the footprints. You just have to think logically speaking when it comes to certain areas, which ones make more sense to trade. Hopefully that helps you out, guys. I really hopefully that does, because I get, I'm not saying tired, but I get frustrated in seeing people, complain about getting stopped out and why they got stopped out. I don't understand why I got stopped out. You have to understand. Okay, that means you can't you're not reading the charts the correct way. All right, you don't need indicators to trade. Pure price action, market structure. When it comes to price action and being able to read the market, it's no more than just following order flow and what you see on your charts. Okay, you don't need any fancy indicator to show you order flow, or a footprint or ladder, whatever the case is, and because that makes things more complex. I'm not saying it doesn't work, but that's additional things or something else that you're gonna have to pay close attention to. Orders hitting the bids, orders hitting the ask. Are these orders being absorbed? These iceberg orders, all that other stuff that you're gonna have to pay attention to. I like to keep my trading simple. And that's why I can just look at the candles and the charts and understand, based on, I say, footprint, what the banks and institutions have done prior to, and where they can possibly, make their moves back at. Okay, if I'm looking at a supply area and I see multiple supply areas within a swing, I see that they could test that zone, they could test this zone. I just wait patiently, okay, and then if they confirm if I see confirmation and there's multiple means of confluence, I'll get into that trade. So this is why in the past I've talked about, trading just reading the charts, naked charts. Years ago I started off using a bunch of, I was always adding indicators to my charts, and things got confusing, and I always thought that there has to be some holy grail of indicator that's going to solve my problem. It wasn't that. It was just the fact is I couldn't read what was going on in the market. I couldn't see, I didn't understand liquidity. I couldn't see, be able to read the market. I didn't understand market structure. And that's why I emphasize market structure so heavily here on this channel here, because without it, you might as well just give up until you can figure that piece out, until you can grasp and master market structure. I'm not saying you're going to fail at all times, but people they tend to put the hype around strategies, thinking that a strategy or some indicator is the tool or the holy grail to be able to open the door for them to become a millionaire. That's not how it works. All right. You have to be able to read seriously what's going on here on the charts. I always compare it like reading a book. You have to be able to read to comprehend something, the message, the storyline, whatever it is within that material. Same thing here. We have to be able to read what's taking place on the charts, because the market can change its position and reverse at any given time. Just wanted to explain that to you guys today, so that maybe this helps people understand and stop. Not say stop, because you can't prevent it 100%. All right, because sometimes, like I said, the market, there'll be traps set up, and sometimes the market may stop right here and move straight to the downside without even testing this area here. But at some point, it's going to come back up here, because the market has to fill in all those areas of imbalances and gaps within the market. It has to. But hopefully that resonates. Hopefully that helps somebody out there who's watching this video today. Hopefully it helps you to stop or to help eliminate as much you becoming liquidity within the market. The sooner that you're able to understand how the banks, institutions are moving and being able to see their footprint, we're ranging right now. Loads and lots of traders have a hard time trading this stuff right here. When you are able to read, okay, and understand and follow market structure, things like this, trading days like this, become a little bit easier. All right, in time. I'm not saying it's going to happen overnight, but it becomes a little bit easier. I took a few trades today, and people probably can't understand or grasp, well, why did he take that trade there? I don't understand, how could he have taken that trade there? I didn't see any trade opportunities. I saw some trade opportunities. Maybe you didn't. Maybe because you trade differently than I do. Maybe you do trade supply and demand, but you just don't see it the way that I do. All right. So that's the thing about trading too. Not everybody's going to take the same trade setups, regardless if you trade supply and demand or a different strategy, because we see things that others may not see sometimes. And then sometimes we see the same exact thing. That's just a part of trading. Okay. I miss some zones that you may have saw. You missed some zones that I may have saw. That's why I created a Discord community, so we can share our trades as traders. So if you are a futures trader and you want to join a free community of future traders or like-minded traders, come over and join us. Find the link down in the description portion of the video. It's free of charge. You can engage and share your own trades on the server. There's a channel there titled The Trading Floor. Come over. We post your trades. It also offers an opportunity for traders to be able to explain to other traders why they took that trade. Okay. Now I also have the elite membership program, which a lot of traders ask about. Okay, people ask about all the time. They DM and leave me messages. What that is you kind of get these behind the scenes scoop on the trades that I do take. I go into great detail, just like as if you were sitting right next to me or virtually. I explain in detail why I took those trades, so you can grasp an understanding of the trades that I am taking, so you can understand better too those supply and demand setups. That has helped so many people tremendously. So if you are interested in becoming an elite channel member or supporter, just find the link down in the description portion of the video. Right below the Discord link, there'll be one that says become a elite member. Click on that. 2 tiers will pop up. Make sure to choose the one that says elite channel supporter or elite channel member for $6.99 a month. That's all it is. You get the trade breakdowns, the video playlist, and then all the other little perks and rewards that come with it. All you're doing is supporting my efforts as a content creator here on the platform, and in return, I'm giving something back, okay? So I appreciate all those that support my efforts of me continuously dropping this content, because I know that it's helping tons of individuals. I know why, because people have, have passed their prop firms. People have withdrawn from accounts. People have proven that they become consistent and profitable just simply while watching the videos as well, okay? So spend time. When I say this, get pen and pad, take mental notes. That's how I learned. I educated myself by simply scouring the internet, weeding out what I thought worked and what maybe it didn't work. And then some stuff that I thought did work, it didn't work. So, I spent time in doing so. Now, if you got someone in your back pocket that can be a mentor to you and help you out, whether it's a family member or a friend, whatever the case is, that's the way to go. If so. Now, I'm not a mentor, I'm not an instructor, I'm not a teacher. I put out this information publicly, so many videos here on the channel for free. But again, the ones, like the elite members, they get something in addition to. They get the private videos when it comes to the trade breakdowns, what I'm trying to say. And I do that. It's just a way for me to be able to be more supportive to individuals that are really, just really loyal to the channel here and really want to dig in deep and understand the trades that I take. So, but it's a way for you to support my efforts here too, as well as a content creator here on the YouTube platform. So thank you for everyone that does support my efforts. Outside of that, that's all I have. I'm gonna stop rambling, I'm gonna stop rambling now. But look, I appreciate each and every one of you. If you're not a sub or a subscriber here in the channel, please take the time to go ahead and sub by clicking on that subscribe button. Make sure to turn on all your post notifications so you never miss one of the uploads. And last but not least, please drop a like on the video if you found value in this content today and it helped you understand, oh, okay, now I understand why I'm becoming liquidity and how I can help eliminate some of that risk. All right. Take care. I'll see everyone in the next one.